Did you know that your real estate exam success can be spelled in 10 concepts? And today we are breaking down the topics that you must know to bag an A on your exam. But we are not just covering these 10 concepts, I'm telling you specifically what you need to know for the exam. So without further ado, let's jump into it. The 10 essential concepts. Number 1, agency relationships. The very first concept we are tackling today is agency. If we had to be fair, there's no real estate industry without agency relationships. So you can be sure that you will see an agency-related question on the exam. Agency is a relationship between a client and a real estate agent. When you're faced with an agency question, it will often revolve around two parties, the customer or client and the agent. If you get a question about a principal, just remember that a principal and a client are one and the same. Different names, but the same meaning. And if you want to learn more about agency, then check out our video on the topic. I will leave a link to the video in the description. What you need to know for the exam. The first thing that you need to understand is the difference between a customer and a client. A customer is a potential client. They have not yet signed an agreement with an agent, but have expressed interest in the agent's services. But once the agreement is signed, then you have a client or principal. You will also need to know the different types of agents. There is a special agent, or as I like to call them, one-task agents. Special agents are limited in their scope of work. They can only complete the specific task that they are hired for. Then we have a general agent whose tasks are defined by the terms of their contract with the principal. This relationship is continuous. Finally, we have a universal agent who has the full authority to act on behalf of the principal. These agents are very rare and far in between. Number 2, government powers. Government powers summarize the authority that the government has to enact laws for the welfare of the general public. We use the acronym PEAT to remember the 4 types of governmental powers. If you caught our acronyms video, then chances are big you know what this term is all about. If not, then there's a link in the description to the video with your name on it. What you need to know for the exam. You need to know the definitions and applications of the 4 powers. Police power, which is the government's authority to regulate your use of real estate. Eminent domain is the government's right to take or possess property for the public good. Taxation, which is precisely what the name suggests, clearing the debt with Uncle Sam. And finally, escheat, which is the government's power to possess an individual's property should they pass without a will or heirs. Okay, on the next concept. Number 3, liens. A lien is a claim placed against the property as a result of debt. Think of a mortgage. When you borrow money to purchase a home, the lender has the right to claim the property should you fail to pay. That claim is a lien. What you need to know for the exam. You will need to know the 2 main types of liens, voluntary and involuntary. Voluntary liens result from a contract between the lender and the borrower, like in our mortgage example above. Involuntary liens, on the other hand, are issued without the property owner's consent. They usually result from a court judgment. A good example here is a mechanic's lien. One other thing I want you to remember is the difference between a general and a specific lien. A general lien means that the claim can extend to all your assets, while a specific lien is specific to the property in question. Imagine a financial judgment against someone. Should they fail to pay, the court can order all their properties to be seized and auctioned to repay the debt. That is a general lien. But if you fail to pay your mortgage, the bank will specifically seize only the home. Number 4, fair housing laws. Fair housing laws are a set of laws enacted in 1968 to protect both sellers and buyers from unfair and vicious housing practices. What you need to know for the exam. For the exam, I want you guys to remember the 5 major fair housing violations: stealing, blockbusting, panic peddling, panic selling, and redlining. Of course, we have a comprehensive guide on the Fair Housing Act. and that link will be waiting for you in the description. Number 5, contracts. Simply put, a contract is an agreement between two or more parties. In real estate, these two parties are usually a buyer and a seller. What you need to know for the exam. When you walk into the exam room, I want you to be aware of these 3 different types of contracts: valid, void, and voidable. A valid contract is fully enforceable, and breaking it often results in litigation. There are 4 conditions required for a contract to be considered valid: capable or competent parties, lawful purpose, offer and acceptance, and consideration. These 4 required for a contract to be deemed enforceable, and if any component is missing, we cannot consider it a valid contract. A void contract lacks one or more elements that constitute a valid contract. For example, a contract may be established with a minor, who in this case is not a capable party, or maybe a house is being sold for an illegal purpose. Whatever it lacks, a void contract is not legally enforceable. And then we have a middle ground between the two, a voidable contract. A voidable contract is one that is enforceable but has an error that could void it. Think of a contract stating you are buying 25.5 acres of land, only to realize after signing that it is actually 24.5 acres. You can decide to void the contract because of this error, since that is not what you signed to purchase. Number 6, financing and settlement. To pass the real estate exam, you must understand financing and settlement. Financing covers the avenues buyers can use to purchase a home. And for us normal Americans, that often means one thing: loans. What you need to know for the exam. The different types of loans you must know for the exam include VA loans, which are specifically for veterans. These loans do not require a deposit and offer favorable requirements for our heroes, kind of like a thank you for your service gift. FHA loans, coming from the Federal Housing Administration. These loans are designed for low to moderate income families. Buyers still need a down payment and mortgage insurance premiums. USDA loans from the Department of Agriculture and created specifically to support housing in rural areas. Applicants must meet income eligibility requirements. Conventional loans are the most common type of loan and must follow the guidelines set by Fannie Mae and Freddie Mac. They require lenders to have a good credit score and pay a hefty down payment. Adjustable rate mortgages and fixed rate mortgages. An adjustable rate mortgage allows buyers to pay a fixed amount over a specific period, say 5 years, and then pay an adjustable amount based on predetermined benchmarks. The fixed rate mortgage, however, is a mortgager's safety net. It allows buyers to pay a predetermined rate over the course of the loan. You already know what you have to pay and when. Of course, you will also need to know the basics of earnest money, inflation, and interest rates. Number 7, leasing. A lease is a contractual agreement in which one party, a lessee, is granted rights to a property by a lessor for a specific period. The most common type or example of a lease is a rental agreement. What you need to know for the exam. This is a concept we have all experienced at some point in our lives, or at least we know someone who has. So, for the exam, I want you guys to remember the 4 main types of leases. Sandwich lease. In a sandwich lease, a lessee also becomes a lessor. Simply put, an individual rents a property and then leases it. Percentage lease. In this type of lease, the lessee pays a portion, aka percentage of their revenue, to the lessor as rent. Net lease. In a net lease, a lessee also carries the burden of paying for a part of the taxes, maintenance, and insurance of the property. There are 3 types of net leases: single, double, and triple. Gross lease. A gross lease only demands that a lessee pays a flat agreed upon fee for the duration of the lease. This is a type of lease we see mainly in residential markets. While on the topic of leasing, we cannot ignore property management. Property management can be defined as the overseeing of real estate. And like we discussed in agency relationships, property managers have a fiduciary duty to the clients, the property owners. Number 8, antitrust laws. Antitrust laws are a group of federal and state laws created to ensure good business practices. I like to think of them this way. They are laws created against market monopolies. What you need to know for the exam? Yes, you guessed it right. You must know the Sherman Antitrust Laws. They were created in 1890 to halt market practices that hindered fair competition. As far as the Sherman Antitrust Laws go, you must know price fixing, which is the ill practice of businesses agreeing on a standard market price to push buyers into buying at a higher price. Bid rigging is also an unfair practice in which two or more parties collude to manipulate the bidding process in a way that limits fair competition and can artificially inflate prices. Imagine if agents decide to work together to secure a property at a lower price by agreeing that one of them will submit a low bid while the other refrains from bidding or submits an even lower bid. This reduces competition and may discourage other potential buyers from submitting competitive bids. Group boycotting. This is a bullish tactic in which a group of competitors gangs up against another by refusing to collaborate or work with them. They conspire to exclude, boycott, or otherwise discriminate against a particular competitor, group of competitors, or a certain class of individuals. Market allocation, which occurs when competitors divide or allocate the market among themselves, limiting competition in agreed-upon territories or for specific types of properties or clients. And tie-in agreements. Tie-in agreements happen when a seller ties one service to another, making it mandatory for a client to buy both. Number 9, disclosures. Disclosures mean in real estate exactly what they mean in the normal English language, making something known. Normally, making something known with a negative connotation. The purpose of a disclosure is to ensure the buyer understands what they are purchasing. Disclosure requirements differ from state to state, so you will need to review your state guidelines to know what to prepare for the state-specific exam. However, the general rule is that the seller must disclose any material defects and environmental issues. Think of a house with lead-based paint, groundwater contamination, or a property located near floodplains. These are some of the factors that can negatively affect the buyer, so the seller will have to disclose them. Number 10, real estate math. Though not necessarily a concept, real estate math is such a crucial part of the exam, we just had to include it. What you need to know for the exam. There are several formulas you need to know for the real estate exam, like the 28/36 rule used in calculating mortgage affordability, gross rent multiplier, which is the property price divided by the gross property income, and the T-chart formula, which is an absolute time saver. We love it so much, we have a whole video on how to apply the formula to several math questions. Congratulations, you have 10 concepts down and a successful exam to go. Is there a specific topic you'd like us to cover? Please leave us a comment below. And have you caught our vocabulary video yet? We cover 150 terms you need to know in order to pass the exam. So go and check it out here. Like, share and subscribe, and we'll see you in our next video.